Hello, everybody. Welcome to this webinar. We're going to give it a little bit of time here for people to jump in. I can see people are starting to join, which is great. We had a lot of registrations for this one, so this is exciting. I know that a lot of people are going to register for this one. If you've been tracking for a while, we've been doing a bit of a series around trust accounting. So this is, I think, the sixth or seventh webinar we've done. And, we're really excited today to have Host Allies on this call with us. They're a very close partner of ours that works with a lot of our clients and does a really good job with a lot of them. And they do a lot of, overall overviews of the systems that are coming into play and then transitioning into using clearing and how to get the best out of clearing. And so we're excited to, hand things over to them. They will pretty much run most of the webinar today. I'm going to go through some bookkeeping things at the beginning while people are joining, and then we will kick things off and just kind of pass it over to them. So I'm going to open up a poll right now as people are kind of joining in, if I can find how to do that. There we go. So I'm just going to launch that right away here. Really appreciate any feedback through this poll. Really helps us understand the audience as we're going through the webinar, but then also, following up with people and understanding a little bit more about, users that are here or people that haven't been using clearing yet and, what they're coming into clearing and our sessions looking to get access to from the information that we provide. So really appreciate if you do go through and launch that poll and quickly just go through the 6 or 7 questions that are there. But yeah, so I can see we're kind of getting to 2-3 minutes here. I can see lots of attendees have joined already. You go to the webinar chat. So there's a chat box that you should be able to see 2 links that I provided. So the first link there is basically just a note package. So if you've been at these webinars before, you'll know that each slide we have some content that we provide, and it gives you a place to kind of add your notes and build a bit of a playbook. So we've been doing this for the whole series so far. So if you've been coming to all the events and you've been opening up those notes and keeping notes, then you'll know that you have a bit of a playbook that you're building from where we started, which was really around trust accounting basics, then jumping into booking reconciliations, bank and infrastructural stuff, booking details, transactional details. And then now we're really focusing in on expense management, which is, as you've seen, if you've been using clearing, we've been launching many different features and functionalities, very focused on leveraging automation, AI, fintech, and integrations to do more with your expenses. So excited to start this webinar now, and kind of just kicking it back to where we came from and where we began. We've been doing this webinar with many different service providing partners of ours, but today we have Host Allies joining us, and we're really excited about them joining us. We've been partnered with them since close to the VRMA last year, where we first had a first conversation and have grown into where we are today. Really the goal with this series is to educate folks. I mean, at the end of the day, when we first started building clearing, there was, a very large gap in the education around what trust accounting is and when it should be used and how it should be used. And so our goal has really been to educate, also to empower you. So empower you to do more with less time, or you spending less time, because I know I've talked to so many people in this space that have been like, I didn't get into property management to do accounting and bookkeeping. I came into this space to do a lot of other things, but accounting and bookkeeping weren't really the pieces of the puzzle that I wanted to spend time on, and we've spent so much time on it. And so we want to empower you to do more with less time, and then elevate you to grow your businesses and continue to grow and scale in a way that's a repeatable process. You're not going into 6 or 7 different platforms to close your books at the end of the month. You're maybe working within a couple, one for trust accounting, maybe one for operations accounting. But at the end of the day, we're really trying to centralize everything so that you can elevate your business and scale it. Upcoming webinars, we have about 4 left in this series that we're going to do this year, and then we're going to try to continue with maybe a different topic. But essentially, the next one's really going to be talking about integration, not only necessarily with QuickBooks Online, but with other generic accounting softwares. In this space, and in general in trust accounting, one of the best practices actually is to keep separate sets of books. One's for that property level financials, trust accounting, dealing with reimbursable expenses, so on, and then really managing in a way that in QuickBooks makes it super easy to just focus on the generic accounting stuff of maybe your corporate balance sheet or corporate P&L or some of the other kind of accounting, if you have mortgages, stuff like that, some of those other more advanced reportings that you might need from a business perspective that isn't really relevant for all this property level stuff. It really, if you're working directly from a property management software into QuickBooks, you're probably sending too much data into QuickBooks in the first place. Next, we'll go into financial statements and owner reporting. We've got a ton of them. I'm sure you've seen a lot of new features coming into the software around financial statements and reporting if you're using clearing. And so we'll dive more into kind of what all these different reports are and what they mean. We're targeting November for around deeper dive conversation into tax considerations. Hopefully we'll have some cool integrations to announce there soon. And with that, it could be a really good timing for when we will talk about taxes and the tax considerations of all this stuff. And then lastly, we'll target December for just an overview, hopefully get some clients on to talk about their trust accounting experience with clearing and go from there. So if you're in the session right now and you're, one of our clients and you wanted to maybe join something, then, definitely reach out. We're always happy to jump on a call and schedule and plan this as well, because it gives you exposure too. So it's great. Lastly, if you've missed any of our previous sessions, we do have a YouTube channel with all the recordings. And just the last note here as well is, if you submit questions, we try to get to them in these upcoming sessions. So if there's something on your mind related to one of these topics and you really want to dive more into the educational side or the theory behind it all, then let's jump on a call and or let's get those into that question box in the welcome package, which I remind you is in the chat, and we will definitely build the content to kind of fit the goal of answering those questions for you, because we really want to provide content that you want to come and see. So again, we had a poll launch. I kind of changed the process a little bit because we want to get more people jumping into those polls. So I started it right off the bat. But now I'm going to start switching things over. So we're going to dive into just a brief introduction of Vishal and Host Allies. But first and foremost, if you haven't met me, I'm going to let Vishal kind of introduce himself. I'm Corey. I run the growth at Clearing. So been with the company for close to 3 years now, since kind of day one of actually 6 months before going to market. So been exciting to see the growth that we've had and just the interest in the software. And my background really comes from software. I've been working in software as a service for the last 10 years and kind of always more on the growth side of things. So prior to Clearing, I was working at a property management software, and now I've kind of joined Clearing since day one. So excited to have you here. I have a lot of insights into the background of this company and kind of our direction. So if anybody has questions after this or wants to jump on a call, demo, whatever you'd like to do, we can definitely jump into that. Now I'm going to hand things over to Vishal to introduce himself.
Thank you so much, Corey. I'll tell you, I'm reflecting on it right now. It's been almost a year, and we've really thoroughly enjoyed working with Clearing and with all the clients that we're jointly supporting. And it's amazing that we are today doing our first webinar together, and I'm excited to do a lot more after this. Just for a quick introduction about myself and Host Allies, I've spent the last decade as a property investor and a property manager. And I actually learned the really hard way how difficult it is to juggle growth, guest experience, and also have a strong control over finances. And that's where the idea of Host Allies was born. We are a service firm, and we want to be your ally for the property managers in achieving profitable growth. Achieving growth is one thing, but achieving growth profitability is another thing. And it's a big challenge if you don't have very robust processes around accounting and finance. We at Host Allies support our clients by taking over complete processes like trust accounting or operational finance. And we also act as fractional controllers and advisors, helping our clients on a month-on-month basis, making sure they're making every penny of profit that they can make from their business. We're operating teams out of the US, Canada, and India, and we're supporting clients in the North America for now. That's a quick introduction, and I'm excited to talk about one of the big topics in managing profitability short-term rentals is expense management, and I'm excited to talk about it today. So back to you, Corey.
Yeah, absolutely. And I'm just going to kind of set the stage, and then from here on, Michelle's going to take over. But just some expense considerations in general. I mean, some of the three kind of, I was actually looking through a lot of the conversations I've had in demos over the past 3 years, and kind of tried to figure out, three of the most big challenges that people come to us kind of talking to us about expenses related to the short-term rental properties. And I kind of honed in on these kind of expense considerations when you're really starting to build out your playbook for how you're going to deal with expenses altogether. And so one of the biggest thing is, assigning an expense to a property is probably the most challenging thing that comes with expense management from the feedback we get, because at the end of the day, getting a category is one thing, tying it to some sort of logic-based rule or some sort of AI that knows how to understand what that merchant is and put it towards a category is one thing. But no matter what you look at in a memo on a transaction, there's often no way of knowing, any way of knowing that there should be an assigned property to that. And so that's a challenge. That's a challenge in general for software, but it's also a challenge for individuals. And we've built a lot of things around how we can get that to be even more streamlined and easier to do. And it's leveraging different things like AI or receipt capture and stuff like that. But that transparent stakeholder allocation is super important, especially for the considerations of owners, because they really want to make sure that, you know, if they're going to be giving you money to cover reimbursable expenses, and it depends sometimes on the owner themselves, how much they care about the details, but they do want to make sure that if you're charging them for something, that they're, you know, the one that should be charged for that. There are some compliance and fiduciary responsibilities as well. I mean, you're managing other people's money, so at any given point, you're going to have fiduciary responsibilities and compliances associated with it if you're holding advanced deposits for you know, bookings that are in the future, essentially. And so misallocating or failing to document these reimbursable expenses reliably, it can, depending on where you are, which state you're in, different places in the world, there are different regulations around trust accounting. So I'd always say make sure you go back to your real estate board and understand really what your regulations say. But it can also just damage client trust in general, because if you're consistently making mistakes on the expenses you're charging them and they're asking for more details and you can't provide it, you're going to run into scenarios where maybe, you know, an owner just gets fed up and says, we don't want to work with you anymore. And that's something that everyone wants to avoid. And then accurate payouts and reconciliations. I mean, over and under payments are a big focus of clearing in general. I mean, overpayments through reconciliation errors, underpayments through, you know, not getting that money back from those expenses that you're paying for on behalf of owners. But then again, just tying it to that owner statement, which ultimately then comes back to tying it to a property, which is ultimately the biggest challenge and one of the hardest challenges in this space altogether. And so setting the stage for Vishal to take over, but just wanted to give a little bit of a note on like where we see most people coming to us talking about expenses and really what a lot of the goals are that they're trying to accomplish as they kind of go into expense management tools, whether it's a standalone tool or it's a more all-in-one type accounting solution like clearing for the trust accounting side of things. So I'll pass that back over to you, Vishal, and, you know, take it away.
Great. And Corey, if you want to keep moving the slides, I can just speak to them, right? So I think I just wanted to reiterate what I said earlier about our mission. We're here to help short-term rental property managers achieve profitable growth. And we really do it in two different ways. One is we help them, we are a service partner, and we take on processes end to end, whether it's trust accounting, like building owner statements, reconciling expenses, reconciling ownership, or it's doing the financial accounting processes within QuickBooks, so we can help property managers generate accurate P&Ls and balance sheets. We also help with income tax filing and lodging tax filing and expense management. But these are the foundational tactical steps where a lot of time is consumed. We feel that if we can create this back office for our clients, that helps them focus on what really matters, which is growth and customer experience. We are serving boutique firms that are small and medium size, and we're also serving portfolio companies that want to optimize their financial performance across their portfolio. And like I mentioned earlier, our differentiation is not just quality work we do, but it's also in the insights and the role we play as a fractional controller and so that's a little bit about us. I wanted to move the conversation into today's important topics. Corey, can you move to the next slide? So this is the expense struggle, right? And I'll tell you, I use the word struggle because the struggle is real. And most short-term rental property managers are often struggling with fragmented workflows. They're struggling with integration issues between systems where receipts are kept versus where the reimbursements are done. The manual reconciliation process for handling expenses, it could be 15 hours, sometimes 20 hours on the monthly basis, where clients are spending time on tedious data transfers, where there's inconsistent vendor naming and other issues, and that leads to a lot of potential errors. And finally, what that leads to is delays in owner commissions. The owners don't get their owner statements in a timely manner, or there are errors in the owner statements, which actually strains relationships. So expense management, if not done well, can be a struggle and can lead to various negative outcomes. Corey, can you go to the next? Yeah. Wanted to share with you some real case studies. I mean, these are real examples. I wanted to make sure that we could dollarize the impact of not doing this well. And so the case study number one, we had a property management client that had approximately 30 units. And then when we were doing of their prior year, we discovered that they were not charging their cleaning and maintenance costs accurately um, to their owners, and part of that for a 30 unit was about $7,000 in just 1 month. So it's a meaningful number, right? And on the other case, a slightly larger company, but we noticed that about $20,000 in 1 year because they were not charging about 30% of their reimbursable expenses to their property owners. So poor expense management can cost thousands or more, and that's the main message from this slide. Can we move to the next slide, Corey? Now, the good news is there has been a lot of evolution in the world of banking, and brave new tools are out there that are available for property managers to use to be able to navigate some of these struggles, right? Everything from rule-based automation, where you can set up rules to be able to smartly categorize the expenses automatically to the right vendor and for the right frequency. Virtual bank accounts is a great example where you can set up virtual bank accounts tied to individual properties to streamline the reconciliation and maintain proper practices. And finally, short-term property-specific credit cards. There are ways to assign unique credit cards, virtual cards to specific properties, and that makes the process much more robust with built-in controls and categorization. So these tools are out there, but the challenge really is, do we have the know-how and the right technology and the support to execute them? And some of these topics is what I'm going to cover in the next few slides. And how do you leverage this technology to your best advantage? So how do we get it done the right way? We came up with like a 3-step process. If you look at the before situation, there's too much time being spent, late owner statements, missing reimbursements. And if you do 3 things well, right, and we'll talk about each of them. One is fix your expense process. The second thing is integration and automation. And finally, change the way how you report and reimburse. If you do these 3 things well, the after picture is going to look very differently from the before picture, and there'll be more money added to your bottom line without sacrificing your sanity. So let's walk into the first step, what I mean by fixing the process. So what we know is most property managers are currently using 1 or 2 credit cards to handle all the expenses across the entire team, across all properties. That means one card is paying for everything, whether it's toilet paper, it's emergency HVAC repairs, supplies for all the units that they are managing. Now, when the statement comes in from that card, it's really hard to be able to decode it accurately, and people spend hours in decoding it manually and assigning it to the right properties. Also, what we've noticed is most of our clients, when they are doing all tagging in a 100% manual way, they're not actually utilizing based tagging, right? This ends up limited visibility to property level expenses. So the best practices that we are implementing with our clients is we start with transitioning them to a 1 card per property model, not physical cards, virtual cards. And this allows the users to assign the spending, all the spending on that card down to an individual property. We're also helping them build categorization rules around vendors. If you're buying linens from one supplier, then we can pre-code all transactions for that supplier coded as linen replacement. So by doing those virtual cards and the auto tag, a lot of hours of effort are being saved on a monthly basis, and it also improves the visibility by property, by vendor, and by category. One bonus tip out here is if you actually just do this for the top 10 vendors, you're covering 80 to 90% of your expenses. That's what we've noticed. So that's one of the best practices around using virtual cards and using virtual tagging, fixing the upfront process on how expenses are generated. With that, let's move to the next step. The next step is, Corey, are you going to move it? Okay, the next step is about integration and automation, right? What we've seen, and this is a great example, let's take receipts for an example. Most property managers are using emails or Google Drives to store with folders to store receipts, and then manually uploading those receipts. And they're spending way too much time uploading receipts, coding and matching those receipts, which leads to frequent errors, right? What we are recommending with our clients to set up email to receipt automation. Every time a receipt comes in, it's forwarded, it's attached to the matching transaction automatically, right? Now, clearing is also supporting email to receipt options natively, and they're also supporting it with their partners Ramp and QuickBooks. So on what technology you're using, these tools are available to you to be able to leverage and speed up the process. What we've seen is by doing this exact process, you're able to save about 6 to 8 hours a month, and this typically leads to about 50 to 60% reduction in reconciliation errors. So the integration and automation between all the different systems to make sure that we take full advantage of that is a critical step. And let's move to the final page. This is about how reporting of the owner statements and automating the reimbursement process can significantly help. So what we've noticed is most clients end up tracking their out-of-pocket expenses manually, and as a result of it, they're missing reimbursements, and there are delays in delays in providing owner statements to their clients. So the 3 best practices we talk about here, number 1 is to automate the monthly owner reporting using automated templates. The second best practice is to use reoccurring expenses and markups. For a large percentage of expenses, this tool allows you to not only capture them on an ongoing basis with a one-time setup, but also it guarantees you any markups and profitability that you want to add to those expenses are being consistently charged. And finally, we recommend using batch processing of payments, whether it's owner payments or it's payments to vendors. If we set up those batch processes, it really speeds up your ability to get the owner statements and the owner reports out on time, and you don't have these issues of delays and fractured relationships because of delays. So these are the 3, if you break, these are the 3 foundational things that if we do better, that can lead to a significant amount of time savings. And finally, I'd like to share with you a slide that, Corey, if you can move to the next slide. This slide is about integrated systems. Most property managers are using a task management system like Breezeway or Turno. Most of you are using some sort of a financial accounting system like QuickBooks. You're using a trust accounting system. Clearing is clearly one of the most prevalent trust accounting systems in our industry. But most of you are also using an expense management system. Maybe it's Ramp, maybe it's TopKey, some other expense management system. The key here is to make sure that these systems talk to each other in the right way. There's this which will create real-time visibility and control, streamline workflows, and eventually it leads to better data and better decision making. So if you haven't set up your systems to integrate and talk to each other, that's a big piece of where your time savings is going to come. So I wanted to leave you with this best practice of leveraging integrated systems. Now let's talk a little bit about the impact. If we go to the next slide, so if you do all of these right, I think there are 4 types of impact that you'll see. First of all, instantly you'll see your ability to save 10 to 15 hours a month of work that is being done in manual tasks. You can reclaim that time to do more higher value activities. Instantly you see that expenses that you hadn't got reimbursed for, that reimbursement recovery rate goes up. We also see from clients who do this well, the owner satisfaction actually goes up because all the owner statements are accurate. There are no lesser errors, and they are going in a timely manner. And if you do all of these things, it sets you up to grow, right? That's what we want. Everybody wants to grow. So it sets you up with this process to be able to spend a lot more time in driving growth. Those are the main benefits of doing this process. And let's go to the next slide. We talk a little bit about the do's and the don'ts, right? So as you implement these best practices, there are a couple of common pitfalls to avoid. And then there are some pro moves that can actually help you accelerate, right? So the number one is over-engineered rules. As you're setting up this process, let's not focus on the exception. Let's set up the rules that will work for the norm. Sometimes clients set up very complex rules to meet with that'll work for 1 or 2 of their properties. But if the rules work for like 90%, that'll create the maximum benefit. The second thing is shared cards. If you can stop using shared cards but adopt the recommendation that we had mentioned about having 1 card assigned to each property, that significantly allows you to maintain the audit trails and accountability. And finally, setting up a system of expense management is nothing if you don't have clear policies and processes documented that everybody is trained upon. So establishing those policies and processes are critical to success. Some of the pro moves, automation. Once you have a good process going, right, it's really critical for you to be able to take the time to use the smart tech solutions that are out there and to be able to eliminate the bottlenecks and to boost your operational speed. The second thing is most people end up doing this reconciliation right before season, right? Once a year is when all of these expenses are being reconciled in the right way. And what we are recommending that this is not a process that should be done once a year or once a quarter. It should be on a monthly basis. So all your systems are accurate and all that leads to better owner statements, that leads to better financial profit and loss statements for the property management company too. And finally, if you're stuck and this is hard and you're not moving things forward, please feel free to leverage an experts who are trained to do this. Host Allies would love to help you if you need just some advice to get started. If you can reach out to us after this call and we can do a one-on-one consultation on how things can be moved at a faster pace and how you can take full advantage of this. So that's the slide on implementation guides. And I think we could, let's go to the next slide, Corey. I'd like to hand off to you to complete.
Yeah, absolutely. Thanks for all that, Michelle. And I know there's a lot of questions coming in, so I think we'll get to those as well. Shameless plug, I wanted to do a little bit of a how clearing can help at the end of this, just because I think in general, if you're actively using clearing and you're not necessarily in there as often as some other people on your team are, then it's important to keep up to date with what's kind of been released over the last 6 months. Not only are we really proud of how much we put out in the last 6 months, and if you've worked with other vendors, you'll know that our pace of delivery on features has been pretty fast comparatively. But with that as well, there's a lot of new stuff in there. And so if you haven't had training or if you haven't gotten into these features and, dug deep into these features in a way that you're actually leveraging them, then I just wanted to, make sure that you know that they do exist, because I think that part of the challenge as a as a startup in a space that is very, very busy and everyone's kind of working at many different things at any given time is just the whole fact that you might not be caught up with all the different features and functionalities that are working specifically for you. And so first and foremost, rule-based, logic-based automation. You've seen this since day one. If you started in the software, there was always rule-based logic. But that being said, it's gotten a lot more comprehensive in how you can actually, whether it's on the booking reconciliation side or if it's on the actual merchant and bank side of things from a transactional data perspective. So setting up, I always talk to people about how much they can get just by with rule-based automations in general. And it's quite fascinating actually how much you automate by just creating some simple rules that say, hey, if it's Netflix, put this to streaming. And then you have a virtual card that you subscribe to that Netflix account for that property. And then that ties it to a unique identifier that can say, hey, it's for that property. So little simple things like that can be, go a long way in terms of just like getting you to an X percentage of how much of your expenses are automated. If you haven't noticed, we do have AI categorization now. So our system knows all of your expense categories. It can look at those expense categories, look at all the metadata on a transaction, look at all the data on, maybe a receipt if you upload, because you can turn it on for only transactions that have receipts or for literally every single transaction that comes into the software from an expense perspective. And it will look for a suitable category because it already knows what your expense categories are. If it finds that category, it's going to say, hey, we found a suitable category. It's going to tag it as AI categorized, so you can really easily filter for these and go through them. And then it will look for a reason. It'll provide you with a reason as to why it chose that category. And so, of course, the goal here is then if you need to make adjustments, go ahead and make those adjustments with the idea of AIs getting better over time. With that as well, you can turn this on for just receipt management instead of for all the categorizations. So if you wanted to leverage rule-based automations instead for most of your merchant transactions, but then you wanted to have, AI helping with the categorization of a receipt and tying it to the right property, you can do that as well. How it actually goes into using the receipt to tie to an actual property often comes down to keywords. So if you are, you have a receipt that you have a keyword on there like a zip code or a utility account number that's related to a specific property, you can leverage that to tie it because it can use the vision from the computer to basically find that keyword and match it with a specific category and a specific asset. Receipt capture and documentation kind of played into that one just before, but if you aren't using our receipt capture and documentation, we do have, receipt capture and documentation natively built into the software. I would say like it gets you a large portion of the way there. It's pretty good at what it does, but there are better tools out there like Ramp, for example, who we're direct partners with. You actually get $500 sign up bonus for signing up with them. They give you cash back. There's a lot of really great features and functionalities that they go into much further than we do because that's their core focus. And that's also where you can get virtual and physical credit cards. And often for property managers, it's a very, very low cost to get started. With that as well, on the receipt capture side of things, typically this works really well for if you're out buying something, right? This is a practice that people can get into that, I'm actually bad for this myself. Go on a business travel or something like that, and I have 100 receipts in my back pocket when I get home and I'm like, okay, well, I'm going to come back to doing this later. I wait too long and then I don't remember what some of that stuff was even for. And now I'm arguing with people to get paid back for it. And so with that, having something that right at the point of purchase, you can just take a picture of it and let AI transcribe it, let AI put a category towards it. Maybe you have a little note on there before you take the picture of what the actual property is, so it can find that property specific keyword and tie that to an asset. But now it's in your system. So at the end of the month, when your accounting folks or your finance folks are coming in here and they're going, hey, I need to, figure out what this is and try to match it to an owner statement, they have a little bit more documentation in there because it's an app-based software that basically, or mobile app that basically allows you to take pictures of your receipts, transcribes it, ties it to, what it is. There's also a form there. So if you don't get the AI transcribing it properly because it's not clear, it's very kind of, maybe blurry in the picture or something like that, you can still fill in that detail yourself as well. So it doesn't just rely on AI. It actually allows you to do, AI, or it can be filled in manually. And if you fill it in manually, now you have all the data centralized. And when they do come to putting these to an owner statement, it can be done with automation. New feature over the last couple of weeks, if anybody's been following the vendor management and portal that we've built, we have a whole portal for vendors now. So basically you can have email to payables. So basically you create a bill by emailing it directly in from your inbox. So I get a bill in my inbox, I just forward it on, or maybe I get my vendors to forward it directly to that email. It transcribes that. If you work with your vendors, like Vishal was kind of getting to, right? A lot of expense management actually only goes so far with an AI perspective or with a automation perspective. Some of it is automation driven by process. And if you have a process with your vendors that works really well, one thing that you can easily do is get them to put a keyword on a line item associated with what that is, just tying that back to a property, and then use AI to, forward it into our system. It's going to pull off all the data. If it finds that keyword, it's going to match to the asset. If it finds a category, it's going to tie it to that category. Or you actually can now actually get them access to a vendor portal. So if it's cleaners or maintenance folks that you work very closely with, they can just go in, create an invoice directly in their vendor portal, submit it, then you can pay them. We have ACH payments built in. We support same day, standard, and next day. So we have 3 different types of ACHs that you can do. Keeps you alarmed on when they're due, keeps you alarmed on when they're, past due. And if you have to just mass pay a bunch of bills all at the same time, you can do so and then match it back to that owner statement with automation because of how everything's tying back. We do have a bunch of different integrations with industry tools. I mean, depending on the ones you are using, oftentimes we can either, if we're not integrated now, then if they're using Stripe, it makes it a little bit easier to pull in that data and work with it. But we're always looking to integrate with more. So we have, any given time, we have 5 or 6 integrations on the go. We've launched a Amazon business integration. So this isn't the Amazon consumer model. So basically, like if you're just buying something through your own personal account, it doesn't work in the same way, because Amazon business allows you to create custom fields that then you can map. When you're purchasing, you can map those fields back to our software, which basically tie directly into, if it's a reimbursable expense, you can convert that onto your owner statement. So if you're spending a lot of time shopping with Amazon business, you can certainly get a lot of automation out of that purchase. Because of the deep integration we have with Amazon Business. And then we have a bunch of fintech integrations. One of the most recent ones we announced is Ramp. Ramp's awesome. Basically, if you wanted to take receipt capture and expense management to the next level, you can create virtual credit cards that allow you to essentially tie those to the property, like Vishal was talking about, which is one really, great process-driven way of doing it. I'll talk a little bit more about that before I close that off. We're also integrating with a company called Column, and so that's going to be released fairly soon. This will be almost similar to Ramp in that Ramp has the ability to create virtual credit cards. They don't do that. Instead, they actually have the ability to create virtual account numbers and routing numbers. So you can have either a checkings account, or I think they are the only company that allows you to get legal trust accounts through their system directly off the Federal Reserve. And they are built as a software kind of built on top of the reserve. And then it allows you to click, open a new trust account. Now you have an account number and routing number. You can manage it all directly through clearing. So that's something that we're excited about actually, releasing in the software within the next couple of weeks. Right now, you can already get started working with them. They offer a large FDIC insurance, higher than I've ever heard before. They have completely no fee banking. So if you're looking to open a trust account, definitely reach out. I can get you a connection to them. It's one of my most exciting features that I think is going to be released in clearing in the next little while. And you're going to have a lot of ways to provision and do everything directly in clearing, so you don't have to jump in between multiple different softwares. On the note of Ramp, we talked about kind of Vishal talked about one really good way to get some automation with Ramp. How taking it back to just kind of industry and theoretical, kind of 3 different ways that people use three different ways that people use Ramp that I know of in the industry, just through the conversations and topics that I've had. The first would be how Vishal explained it, right? So he's not necessarily talking physical cards. Oftentimes when you get to a physical card level, maybe you have 80 properties, like good luck scaling that, right? 80 physical cards in your wallet when you're walking around doesn't make much sense. Virtual cards, though, makes a ton of sense because how much stuff nowadays can you pay for online by putting in a credit card number? And so if different properties are paying for unique things and you have a credit card number that you can tie to that property, now you have a unique identifier that ties directly to which asset it is. And then clearing pulls that in, consumes it, and matches it for your statements and for reconciling the actual transactions, categorizing it, putting into the right P&Ls, and generating all that financial reporting you're looking for. The other way that I hear about, and this is something that some people are doing with our software as well, is they will have one card, but they use Ramp's advanced kind of tools because they have a bunch of different tools that we don't really have in our receipt capture tool to be able to automate the tie to a property level. And so if you go to their website and you go to expense management, you can actually play around with their app directly on there. It's kind of cool because you'll get a text message saying, hey, I see a card transaction for this. What was it for? Which category should it go into? Upload a receipt. And it keeps you on track to make sure that you're uploading receipts. Make sure that if it's somebody on your team that's doing this, then they have to upload the receipts before they can get reimbursed back on that or before they can close off that specific transaction. So Ramp is kind of taking our expense management capabilities and then going, 5 or 6 steps way further because they are the fastest growing fintech company in the world. That might not be exactly accurate, but it's one of them for sure. They just raised $16 billion to focus specifically on expense management for all industries. And we're the partner that's bringing them into the short-term rental space at the moment, which is really exciting for us as well. And then the third way is essentially with vendors. So oftentimes you can have a vendor who says, hey, here's a credit card for that vendor. You can use it up to this limit. You have spend limits on it, and then they have to upload documentation when they're buying cleaning supplies, upload the receipt. If there's a receipt with a keyword, it can match. If it has a, categorical spend, you can match it. If you're using one of the ERP systems that they work with, you can pull in the property levels as well and pass them over to clearing. So there's lots of different ways. It's not just with these individual cards, which oftentimes I say that in demos or I'm talking to somebody about that and they go, well, that's great if I had 5 properties, but they don't really realize that how much can actually be paid for with a virtual credit card number is a very, very large portion of their transactions, and they can be broken down into individual assets in a much more streamlined way. And so going that direction is probably the easiest way to get the most automation, but there are other ways to use these fintech tools as well to be able to do more directly within the software. And like I said, anything we're mentioning here is directly integrated, provisioned, and you can do stuff directly in our software to work with it all. So we're really trying to be that central hub for financial management across the entire space. The vendor portal is taking us a big part of the way there. And then also these fintech integrations brings you some of that more modern technology to your tech stack that maybe you weren't able to get access to before, or you were using before, but then you weren't using it in a way that's connected with all your systems. Which makes it a lot easier to essentially use at the end of the day. The amount of people I talk to when I jump on a call and they say, yeah, we work with Bill.com or we work with this or we work with that. These are all great tools and they all have great abilities, but we're building a tech stack that kind of works as a process together. And from what we've seen anyways, Ramp's one of the easiest ways to get set up and started. And they also have, very, very, very affordable rates associated with it. Plus you make money off of it. Same with Column. When we dive more into Column and I'm going to do webinars with both these companies in the next couple of months. So stay tuned for that. I think Ramp's near the end of August and then Column's going to be a little bit after that. But the nice thing about working with Column Bank is that there's always this loophole or there's always this issue with interest, right? Like who's collecting the interest on money that's being held in the trust account. And this is getting a little bit off topic, but the reason I bring it up is because they have a really great way of actually providing you with rewards so that you can make money off that advanced deposits, but it's not in the form of interest. So if you're in a state where interest is not allowed to be collected on these advanced deposits, you get like a credit-based system that they'll go pay your expenses for you by you submitting your invoices to them, and you get a certain percentage back for doing so. So in a lot of ways, these tools bring more expense automation capabilities through their unique identifiers, but then they also go further than that, and they can actually make you a little bit of money, which maybe then is paying for your entire clearing subscription. So, there's going to be more to come with this. A lot of people are moving into Ramp right now from our software. I see a notification every time somebody looks at it. And it's an exciting thing that's coming down the line. I'm going to pause now. There is a question and answer section. I know I kind of got rambling there, so apologize for that, but there is a question and answer section here. So with that, I just want to kind of direct all these questions to Vishal so we can get, an expert's opinion on a lot of this stuff. And thank you for letting me just give a little bit of an update on the product, where we're at, what we've been doing, because, there's a lot of really cool stuff coming. Vishal, I'm going to ask you a question here that's from the audience. So, what is it saying? I can't really read at the same time. I'm trying to move it around. Sorry. Um, so what's the difference between like using a traditional bank account or like a traditional credit card through your bank or using a fintech solution like a ramp, for example? Like, is there any major difference? Or are you essentially going to be using, similar type functionality? You can certainly set up different cards for different properties with your bank, but what's your opinion on the difference between using more traditional banking versus like these new fintech solutions?
It's a great question, Corey. And I think when most traditional banks, they focus on in their core service, they have automation capability. A fintech platforms like Ramp will provide you real-time expense tracking, number one, instant virtual cards, instant virtual accounts, advanced policy controls, the kind of policies that you were talking about, that you have the ability to set different levels of policy, property level by category, live data, seamless integrations with various accounting tools, and hands-on automation. Now, these functionalities that are available in these fintech platforms is what differentiates them from using a traditional bank, and it actually saves a tremendous amount of time versus following the traditional process.
Awesome. Um, Next question here is from Michael, just asking how you get started with Column. So whether it's Column or Ramp, if you're using clearing or you're not using clearing, you can certainly reach out to me. I can get you direct contact with somebody. That's going to give you probably the fastest response times. A lot of these softwares are, they're not really focused necessarily so much on short-term rentals. It's a part of their kind of verticals that they're focused on. They're very, amazing softwares that have grown very, very quickly and, heading for that IPO, like crazy whatever you call it, unicorns, stuff like that. So they have big teams, but they also, I don't know that they have the rights. Definitely with Ramp, you can go through their website, you'll find us. There's actually a landing page you can go through with Ramp to submit your email, and then the right person's going to come out to you. But with Column right now, it's more direct integration or direct introduction. So Michael, I'll follow up with you after this call and get you an introduction to their team there so you can have a bit of a better conversation. Yep. Brian, I see your question here, contact info. I'm going to email you right after this call so you have mine, and I'll CC Vishal on there as well. My email is Corey@getclearing.co, and then Vishal is, go ahead and say your email here, Vishal, for the recording.
It's VISHAL, Vishal at hostallies.com, and I'll add it to the chat.
Yeah, I certainly have an email that's going out tomorrow after this call as well, which has a link directly to their website. Question and answer here. It's an anonymous question. It says, do you work with any inventory software or a system to categorize supplies and pricing? Yes, we do work with different softwares that do inventory. Properly is one of them. Turno does some inventory stuff, but depending on how you're using it, I guess. There's other ways that we can get access to different data across the industry as well. And so basically, with Breezeway, we have certain aspects that we can automate through that as well, whether that's supplies and maintenance or whether that's supply costs and labor. There's, a lot of things coming in from these different places. But in terms of specifically inventory software, I'm chatting with a few right now. So inventory is a big challenge in this space. And I think we're looking to integrate and to do more with Aperto's a great vendor. I remember working with them when I was at a property management software. If you're not aware of all the integrations around our inventory and supplies and cleaning and turnover, just go into the marketplace in our app. You'll see all of them, and there's videos for literally every single one of them to get set up with. Aperto, it's a big focus of mine to get in more contact with them as well. Next question here, and there's a few more that have come in. I guess this one, I can answer it or you can answer it, up to you, Vishal, but I kind of talked about this in my little spiel. So it's an anonymous question as well. How do zero balance accounts and virtual accounts help with expense tracking? So maybe you can go first, and then, I can add some stuff to that as well.
So the virtual and zero balance accounts, the biggest benefit is they allows us to separate transactions for different rental properties, categories, and stakeholders. If you had one physical card, right, or one particular account, and all the expenses for all properties are going into one account, then you have to go and tag the transactions to individual properties, and then you can submit owner statements or run your expenses. That's what gets eliminated with the zero balance accounts. virtual accounts, but the ability to have one that is tied uniquely to an individual property allows it all transactions related to that particular property are particular account. So that allows you to do the segregation and separation of all the expenses, which therefore creates a lot more transparency and real-time visibility down to the property level.
Awesome. Yeah, that's exactly it, right? Process-driven automation is probably, you're going to get a certain amount of the way there with AI, with logic, with, different rules that you can set up. But at some point, a merchant transaction in your bank account only has so much data. It only has so much metadata behind the scenes as well. If you're tech integrated through it, you can do more with ramp and column because we have deeper levels of integrations, but not everyone uses column bank for their trust accounting or for their ramp for credit cards. And so we do obviously work with bank accounts and credit cards in US and Canada, so we can connect to those ones as well. So if you're working with a major bank, it's been very rare in the US that a bank hasn't been able to work with us. If it is the case, it's usually like a very, very, very small specific credit union in a state or something like that. But when it comes down to most of the major banks, we can connect to those as well. And a lot of these techniques you can actually set up with your bank. If you really like having, your credit cards through your Bank of America or whatever you're using, you can create more cards and you can have, and then you can use our receipt capture tool as well. So there's ways to leverage kind of the best of both worlds if you really want to use your own banking. But when you get to that, wanting to take that next step, one of the only ways to do so is essentially with process, right? Because there's not any more data that you can't just randomly make up data unless you have a way of adding that data to it, like through a receipt upload and then putting in a form, or through ramp asking you questions, through text messages, or through receipts that are attached that have more data on them. So at the end of the day, what I'm getting into is really with these numbers, with these zero balance accounts and virtual accounts that are kind of available, or credit cards. It's the unique identifier that really is going to become your way of getting into a little bit more automation. So if you are using different cards per property, or if you are using this card for this specific merchant and giving them a card to say, hey, you don't have to ask us for approval to go buy supplies, just this, you have a limit on it, basically, right? It's that unique identifier that we're looking for there. I see the question from Bank of America and Alaska Airlines mileage program. Yeah, I Bank of America, I haven't run into any issues with it so far that I've heard of, but usually we verify it before we jump on, because there's a way that we can just see specifically which one it is. But I know we have clients using Bank of America. Thanks for that question, Anonymous. Okay. Is there more questions here? Yeah, there's another question that just came through. Waleed, does this work with QuickBooks Desktop? Maybe I'll let Vishal answer that question if he wants to. I know that we don't have a direct integration to QuickBooks Desktop, so it would involve a little bit of a manual pass over into QuickBooks Desktop, but nothing extremely major. But Vishal, do you have any experience with desktop yet?
Yeah, most of our experience is around QuickBooks Online, but I can, Waleed, if you want, I can connect with you after this call, and I can talk a little bit about how to solve with QuickBooks Desktop the same integration issues. So I'll send you an email after the call and we can discuss further.
Yeah, we definitely have clients that use QuickBooks Desktop. It's becoming less and less because a lot of people that traditionally were like, we don't want to move off QuickBooks Desktop because the online version isn't nearly the same level as what the desktop version is. Some of that, deflection is becoming less and less. So essentially, like, I've talked to a lot of accountants. I talk to accountants most days, and a lot of them that were kind of resistant to moving to online have started to move to online. So there are ways that you can do it without having to have that direct integration. With how we've uniquely built out our integration with desktop or with QuickBooks, which will probably be a big part of our next topic. Like, the way we integrate with QuickBooks is very different than how any PMS is integrating with QuickBooks. And so the reason why is because we do a lot more automation before things get there to make it a lot easier for everything to pass over. So oftentimes, and Vishal, we were talking about this last time, actually, like, oftentimes, even if somebody's using classes in QuickBooks, like, you can actually, if you're using clearing in the specific way that works really well, you can actually get rid of having to even pay for classes if you're using clearing properly. So
that's true. And that's a big, when we think of automating the integration, and with all the work that Corey and the team are doing, the Fintech software, you can actually end up using a lower subscription for QuickBooks and still get all of these benefits, which is amazing just to see that happen.
I think we have there's a little bit more that I have to talk about at the end. I think we have a few more time for a few more questions here. There's another one here from anonymous. Do you assist in restructuring of chart of accounts and QuickBooks when signing up? So that's a great question actually, and specifically related to working with our system standalone or working with a service partner like Host Allies, which honestly, a lot of people start using our system. They get it, they like it. They're like, I want to keep it, but I don't want to be doing this regardless. So I want to talk to some service providers. But in terms of like restructuring your chart of accounts, we do have a standard onboarding process. Our standard onboarding process is going to be depending on the number of properties you have. I can dive more into what that is through the call, but we don't really you can buy more, you can purchase more bundle, more time for onboarding, but we don't really keep up with like your month over month or like more or less your kind of process ideation and kind of the structuring of the theory behind the scenes. But Vishal certainly has worked through this type of process before, I'm sure.
And then the only thing I would tell you is when we have clients that come on, we actually help them with looking at their entire QuickBooks setup. We help them in restructuring their QuickBooks chart of accounts in a way that the integration with clearing and the integration with RAM or other works perfectly well. For example, we know that at the end of the month, clearing is passing a journal entry where the trust account, the proceeds that the property management company has to earn should be pushed into QuickBooks to get in a way that it's seamless, and it also all the expenses get categorized to the right ledgers, so your P&L looks correct. There is a process that we need to follow up front, and we do help our clients with setting up those processes at the very beginning of their QuickBooks setup, or when we bring them on and we make a transition to clearing, and we adjust their QuickBooks setup.
Awesome. Last question. I'll accept this last one here because it's a good one. So what processes do you recommend if a user mistakenly uses the wrong credit card for the wrong property? Vishal, do you wanna answer that one?
Yeah, a couple of things you can do is using the tagging functionality. So if you can create property tags for every expense transaction, in this case, if it has been tagged incorrectly, it's going to be very easily visible, and whoever is doing the audit can retag it or reclassify it to the right property. If you've already made changes and they've been recorded, then the only way to solve for that would be to do journal entries. If you're doing it in QuickBooks, and if you're clearing, you would have to actually redo the expense. So tagging is a feature around assigning property tags to individual expenses if you don't have the virtual bank accounts or the virtual credit cards. The other thing you could do is using a split transaction feature, where if you're using an accounting tool that allows you to take a single transaction and divide it amongst multiple properties, that allows you to take an expense that is kind of bundled and spread it across different properties. So those are certain ways to miscategorizations and also categorizing things in an accurate way if you don't have virtual accounts or unique credit cards for each property.
Yeah, and then I think I just add there, the one thing I would add on that as well, if you do have virtual credit cards, or if you do have, credit cards that you're using that are done through like a fintech solution, is everything's filterable, right? So you can see how everything transaction converts over to a category or converts over to an asset. And a lot of people, no matter what, are still reconciling a credit card statement at the end of the month to make sure things are accurate and there's no duplicates, there's no erroneous transactions, because at the end of the day, there is still an accounting process involved in closing your month end. With that as well, you can actually set up our integrations to either be, this is going to pass over and we're going to tie this in directly, and then you can just convert it over into a reimbursable expense. But you can also be in control of what does get converted over to a reimbursable expense. So before you get to that point of actually saying, okay, let's go through it, you can audit it all before if you'd like to. So there are different ways of going about doing this, even if you are using virtual credit cards as well, just through how we built the integration, making it a little bit more unique. So we're running out of time now. There's two last questions. There will be a recording of the session. And do we have any videos. I mean, the best way to get access to a video of our software would be through a demo, spending time with me or somebody on the team on a call, going through it at a very deep level, because there's just so much that it can do, and it's a very flexible system. So I usually work in a way that we consult and get down to a level of like what you actually want to understand and what you need for your business, and then kind of tailor it for that. So yeah, next session, wrapping things up, feel free to jump if you don't have time, but next session is going to be talking about QuickBooks Online and just other accounting softwares. I say QuickBooks Online, it's our main integration for other accounting softwares. Hopefully we'll get so lucky to have Vishal join us again, or maybe have somebody else join us, but I think we're going to be talking to Vishal about this one as well, because they have a very unique team with how they have experts on both sides of the, trust accounting side, but then also on the side of generic accounting and kind of your corporate accounting or the business accounting operations. So hopefully we'll have them there. But yeah, definitely there's a link in the chat. There's also, a link that's going to go out to register for this one. If you found this informative, reach out, say hi, ask any questions you have, but also attend this next session. But ultimately, if you've missed any of the previous sessions, this one was very much so focused on expenses, but they're all available on YouTube. But yeah, so yeah, there'll be a survey that goes out after this. We really want to, thank you for being here. Appreciate your time. Feel free to reach out to either of us. If you want me to directly integrate or introduce you to anybody as well, I'm certainly happy to as well. And if there's no other questions, we'll close things off for now. All right. Thanks again for everything. Have a good rest of your day. Bye now.
Thank you.